140. Sonia, hi. Nigel, hi.
Hi, Prashant. Good morning. Nigel, morning. So we're starting on the back foot, right, this morning. At least that's what all the indications are in the market. SGX Nifty, as you said, 70 points lower. And it was a steep slide. I mean, almost a 500-point slide is what we saw on the Dow. As Prashant was also mentioning, now the expectations are that in the December Fed meeting, there could be a 50 basis points rate hike because the data has been quite strong, whether it's the ISM data that came through, the labor market data has been good, the jobs report was strong. So the economy in the US is resilient and hence perhaps they can go in for another rate hike. And that's one of the premise on which the market sold off yesterday. For our own markets, the FI selling once again has resumed. So FI sold about 1,140 odd crores. It's going to be a gap down opening. DI buying has supported it though, almost 2,600 odd crores. Around these all-time highs is where the Nifty is consolidating. The range, see, 18,200 has been a bit of a firm support for the market. At the upper end, all eyes will of course be at that 19,000 level. But there seems to be lack of any great positive trigger to get the market to above 19,000. There's the RBI policy tomorrow. Let's see. For now, the CNBC TV18 poll suggests a 35 basis points rate hike. But the change in stance is something that even Lata was talking about yesterday, that perhaps the RBI could change its stance given the global uncertainties. If that comes about, how the market reacts. But as of now, even though the buy on dips continues, Prashant, you get a sense that there's no real major positive trigger because you're also heading into the end of the year, right?
Yeah, and we're losing people as we go into the end of the year, right? More and more people.
Say that.
Some are coming back, but others are going as well. So
be specific, losing them on holiday, right?
Losing holidays, I mean, absolutely. You said end of the year. The population dwindles to holidays. All right, let's just quickly run you through a few things. So, yesterday the market got an unfriendly reminder that the Fed's not done, right? You have the data in the US, which even now in services, by the way, goods inflation is easier to get rid of as compared to services inflation, always everywhere. So we have services ISM, which came in stronger. And that is the unfriendly reminder that the Fed may have to, I mean, it doesn't change what they will do or how high they take the rate to, although there is also a debate there. But, they may take the rate to 5 and then hold it for longer, higher for longer. That's essentially the fear. In any case, I mean, I was at the margin, things have been looking very constructive. The markets have been grinding higher. But, for example, I mentioned the Wix yesterday, which was, at about 19, right? I mean, April lows around the area where it starts to bounce a little bit. So it was getting a little stretched in the near term. So you've seen a pullback. The S&P is down 1.8. The 10-year yield has bounced about 10 basis points. And the dollar index from under 104, it's back above 105 now. So these are the three things. China reopening, and that's a market which has been shielded. By the way, last month, the month of November, we've got the Chinese market, which did 30% gains. Yesterday, the Hang Seng Tech Index rallied 9%. So China reopening story is kind of shielding, for now, only the Chinese market and maybe the commodity space, especially metals, from all that is happening globally. The dollar sort of rebound, etc. We'll see if that continues to be the case. Exit poll results came out yesterday. It's a sweep for the BJP in Gujarat. In Himachal, it's touch and go. It's very, very close. So we'll have to kind of see. The Nifty ended higher yesterday, and it was a positive close after what was a negative session for most parts of the day. So in that sense, the low yesterday becomes important, 18,591. That is the low point of the day, which is about 100 points from yesterday's close. The 20-day, if that comes in at about 18,417, which I think is the next level to which the market will look for support from. And Friday's high of 18,887, in case we see a big reversal, flourish, etc. I mean, I think that becomes the level to watch on the upside. Like the last many sessions now, like the last fortnight, basically, broader markets, mid caps and small caps are continuing to do well. Those indices were up just under 0.25% and almost 0.5% on the mid and the small caps, respectively. So the broader market is still doing and is still in a fine fettle. Now, what are you watching?
Well, the buy on dips has worked. It worked yesterday. And I'm expecting more of the same even today with a strict stop loss. Yesterday, we bounced off that, 18,591 odd, and we ended in the green. Remember, Reliance Industries, the biggest way, didn't perform. But the banks and the financial stocks, well, they did good enough to take care of Reliance's underperformance. But the real story is in the broader markets. Because the last few sessions, the broader markets have outperformed the Nifty. And I like that screen. But today is going to be the test for the broader markets in particular, because overnight cues are not that great. They've seen a recent outperformance, and also the exit polls, well, with regard to Himachal Pradesh, the polls are suggesting a very close contest, which maybe let's see how the street reacts to that. So the broader markets outperformance is going to be tested today. Two big events coming up. You have the RBI policy support coming in from there, and also the election results in the next 48 hours or so. So those are the big cues. On the futures and options space, well, yesterday you had some bit of unwinding on the Nifty futures, while on the Nifty Bank, there were fresh longs that were created out there. The Nifty Bank was up more than 200 points, and you saw the open interest as well that did move up. But the FIs, they lightened positions on both sides, on the short as well as the long side. However, what's encouraging is they wrote close to around 60,000 put contracts. And there was a fair bit of action on the Nifty Bank put side. So the 43,300 put as well as the 43,200 put, there were signs of writing at those levels. If that's the case, then you have support coming in at around the 42,900. And I say that because we bounced off that level in the last few sessions. If we break that, maybe we visit the 20 DMA. However, the recent high will be a bit of a resistance. Similar is the case with the Nifty as well. The 18,700 call has seen a big amount of open interest, so there is writing at that particular strike. The premium's around 100 rupees odd, so you plug that in, 18,800, 18,850 becomes a resistance zone. Yesterday, we saw some action at around the 18,450 put. So what are the levels you're looking at out there? In the near term, the 18,550 to 18,600, that's a crucial support zone. If you break that, maybe you visit the 20 DMA. On the upside, the recent high will be a bit of resistance. How do you approach trade? Buy on dips has worked, so stick to that. Try to get in around that 18,550 odd on the Nifty, and risk reward could favor you. Direction in the next couple of days will be given from the RBI governor and the tone that he gives out. So the SGX Nifty suggesting a pullback. Maybe if you get a bit of a deeper gash, as we saw yesterday, get in around that 18,550 and keep a stop loss at around 18,500. Risk reward could support you. What else, Sonia?
Okay, so risk reward could support you. Also, for now, crude continues to trade lower. So there was that 3% fall that we saw overnight in crude. Still well below $85 a barrel. So do keep your eye out on that. That's another important internal to track. 83.50 now on Brent crude. But for now, the SGX Nifty indicating a gap down opening. We'll see how it goes. Most Asian markets are also under a bit of pressure this morning. And there is that Fed December meeting. All eyes will be on that. A 50 basis points rate hike is what the street is looking at. But there is a lot of commentary coming in. Is the market back in risk-off mode? What do you do from here on? Gautam Dugar of Motilal Oswal expects the market to now track earnings growth. He says that moderation in the inflation print